Friends, welcome back to my channel. So in this video I will be discussing one company in the chemical sector that looks very good in valuations and looks very attractive at the current levels. So the company I am talking about is GHCL Ltd. So GHCL is one of the leading players in soda ash industry. So it is one of the largest manufacturers of soda ash, and it is actually into textile sector also, and it's trading at 516 level now. So it recently posted its 9 months third quarter results. So it has a market cap of 4934 crores. Its current price is 516. Its high and low price is 709 and 464. So in the last 1 year it has corrected from over 600 levels to around 516 levels now. Currently it's trading at around based on the expected EPS of around 100 110, is trading at around 4 to 5 times now. Its book value is 376, and dividend is around 2%, and the return on capital is 25%, return on equity is 23%, and face value is 10. So regarding this company, it actually recently announced. Before going into the details of this company, I will give a brief overview of this results of this company. So this company recently announced results for Q3 of Fy23. It posted consolidated total income of around 1289 crores for the Q3, as compared to 1389 crores in the last quarter and 1006 crores in the previous year. So, and the profit before tax is 332 crores as compared to 399 crores in the previous quarter and 200 crores in the previous year. So there is a 130 crores increase in profit before tax, and actually in the profit after tax is around 250 crores as compared to 292 crores in the previous quarter and 162 crores in the previous year. So the profit there is a 90 crores increase in net profit also in the current quarter as compared to previous year. So if you see the 9 months results, they actually had a total income of 4050 crores as compared to 2511 crores in the previous 9 months of FY22, and they had a profit before taxes of 1119 crores, 1183 crores, and as compared to 449 crores in the previous year, and net profit of 898 crores as compared to 375 crores. So if you see the 9 months results, it's already increased by around 500 crores as compared to the previous year, and they actually recently demerged their home textile business to Intercon Industries Limited. So even after that, there is only a small decline in net profit, and actually the net profit from continuing operations is very high. It's actually almost more than doubled in the 9 months of FY23 as compared to FY21. If you see the full year results, the total revenue was 3790 crores, net profit was 646 crores, and the profit before tax was 810 crores. So from 646 crores, it has already exceeded by over 200 crores for the 9 months itself of FY23. So this company currently is having a quarter EPS of around 25, and the 9 months EPS are 94, and the full year previous EPS year FY20 EPS was around 62. It's now trading at around, based on the expected EPS around 110 to 120, is trading at just around 4-5 times FY23 EPS, which looks very attractive for long term investment considering the growth is reported in the current year. So I will give into more details of this company's operations in this video. In the investor presentation of the company, you can actually get an overview of the along with the 9 months results. We can actually see a company overview here. So it is one of the leading players in. It is one of the second largest manufacturer in India, in soda ash in India, with 25% market share. They have 12 lakh metric ton soda ash capacity. They also have 2.25 lakh spindle capacity, cotton spindle capacity. So they are into both chemical and textile sector. So recently they announced the demerger of their textile business. So the shareholders in GHCL will get the shares in the demerged company, textile company, in the ratio 1:1, and they have the best-in-class operations management. They have good capex planning and execution, financial management, focused management approach. They are actually targeting to grow the profit at a CAGR of 15% on long-term horizon, and they actually have a return equity 21% and dividend payout in the ratio 15-20% of their profits, and return capital is 23%. So they are a leading soda ash player in India. They have 75% renewable energy in their yarn division, and the business philosophy inclusive growth for all. They have a business philosophy inclusive growth for all stakeholders, and they focus to emerge a sustainable business organization, and they have a professionally managed workforce. They have 3 decades of Indian manufacturing experience. And regarding their evolution over the years, they actually commenced a production of soda ash with a 4.2 lakh metric ton capacity from the period 1998 to 2000. they increased their capacity to 5.25 lakh metric tons. They actually also manufactured edible oils production and along the saffron salt in that during that period. In 2001 to 2008 period, they increased the soda ash capacity to 8.5 lakhs metric tons per annum, and they also entered the spinning business with 65,000 spindles, which subsequently increased to 140,000 spindles. So they actually commissioned the home textiles plant with a 36 million meters processing capacity and 96 air jet looms. They also commissioned their refined sodium bicarbonate plant during that period. From the period 2009 to 15, they actually increased the spinning capacity to 175,000, installed 3,320 rotors in spinning. They launched IFLO salt and IFLO honey brands. Their air loop capacity increased to 162. From the period 2016 to 18, they actually increased the soda ash capacity to 9.75 lakh metric tons per annum. They also doubled the sodium bicarbonate capacity to 60,000 metric tons per annum. They added TFOs for value added in air jet spinning, and the home textiles processing capacity increased to 45 million meters from with a total 190 air jet weaving loom. During the period from 2019-20, they increased the soda ash capacity to 11 lakhs metric tons per annum year, and they actually being one of the largest manufacturers of soda ash in India in a single location. They actually also increased the spinning capacity to 185,000 tons. And during the period 2021-22, they actually successfully completed the disinvestment from the home textile business to Indocon Industries for a consideration of 630 crores. And in 2022-23, that is current period, they actually increased the soda ash capacity to 12 lakh metric tons per annum. Spinning capacity increased to 225,000, and they actually added renewable 20 megawatt renewable energy in the spinning division. So their objective is to achieve a CAGR growth of 15% in the bottom line, creating value for the stakeholders, and increase their brand image, and also contribute to the as a CSR initiative. They also have CSR initiative also. They also contribute to the society also. They have a lot of initiatives. Like they are actually wanted to become the top 100 great place to work, and they have a 25% female employee representation, and they are also committed to climate welfare also. So they can see these details in their company presentation of that came the current results. So along with the 9 months results of FY23, they are included a management commentary in their presentation. So regarding the commenting on the Q3 FY23 performance, their MD actually said that our performance has been constantly strong as evidenced by the positive domestic trends. Both revenues and profitability reported healthy acceleration during the quarter on year-on-year basis. While the textile industry faced the challenges, the inorganic chemicals segment saw notable growth, driving overall success. So regarding the inorganic chemicals, the market for soda ash has remained healthy with some import pressure from China due to subdued domestic demand, as indicated by the last call resulting in price cut in early November. But prices remain stable since then. We are watchful of the condition. This trend may change the opening market in China. Given the current market dynamics, we remain optimistic of the continued growth in inorganic chemicals. Going forward, the demand is expected to be get an additional boost from emerging segments like such as solar glass and lithium-ion batteries. So they actually expect the growth to continue in their main products in the chemical segment, that's both soda ash and sodium bicarbonate. And they are actually, and regarding the textile business, cotton and yarn price continue to stay soft from the high point, affecting product uptake and domestic demand. Festivities in European markets have indicated improved customer sentiment, higher sales and reduced store inventories. I am optimistic about the evolving industry dynamics and believe the GHCL experience expertise will allow it to excel in the years to come. So even though there is a slight dip in profit growth this current quarter, they actually expect the textile industry also to perform better in the subsequent quarters and subsequent years. So regarding the performance highlights in Q3 FY23 as compared to Q3 FY22, there is a 28% growth in revenues and 50% growth in EBITDA, and profit after tax increased 62%, and the cash profit is around 278 crores, increased 92%. So the revenue is around 1289 crores as mentioned by me earlier, and the EBITDA is 376 crores, net profit is 248 crores, and cash profit 278 crores. Even though there is a decline of around 7% revenues in the quarter-to-quarter basis, so there is a good improvement in the year-on-year basis. And regarding their performance highlights in 9 months, they actually increased the revenues by 61%, EBITDA by 115%, and the profit after tax by 152%, and the cash profit by 74%. So the cash profit is 879 crores, revenue 4050 crores, and profit after tax 832 crores. So as mentioned by me earlier, now the revenue is for 9 months is 4050 crores, estimated 2510 crores, and the profit after tax is 875 crores from continued operation as compared to 330 crores. That is a growth of 165%, and revenues increased to 61%. So So regarding their based on the improved revenue increase, so they have become a net cash surplus of, they have a net debt of around negative, they don't have any net debt, so they have become zero net debt company. So they have gross debt of 462 crores and net debt of zero. So that is very positive for shareholders. 2 years back, the debt of GHCL was very high, so they have become a net debt, zero debt, net debt company now. And regarding the inorganic chemical business, the revenues increased from 768 crores to around 1050 crores, and EBITDA has increased from 182 crores to 372 crores. So regarding their highlights, so with their revenue increased by 38% higher realization coupled with better volumes. On quarter basis is down to 6% due to planned shutdown during the quarter and temporarily blip due to global factors indicated in the last call. And year-on-year basis, EBITDA performance has a significant boost due to control over operating costs and higher realizations for our segment. And and regarding their textile business, the revenues has actually slightly dipped from 241 crores to 233 crores, and EBITDA is 3 crores from 69 crores. So the headwinds in the textile sector continued in the current quarter with softening cotton and yarn prices, which negatively impact the performance in the spinning segment. Revenues are down 3% year and down by 10% quarter. EBITDA is down significantly, primarily due to one-time stock impact because of significant reduction in cotton and yarn prices, higher rate cotton inventory at the beginning quarter. EBITDA margin stood at 1.3% for Q3 of Fy23. So this is actually impacted the results of most of the cotton companies. So GHCL, since it's actually present in both chemicals and textile segment, the revenue is actually due to the performance in soda ash segment and chemical segment, the EBITDA has actually vastly improved as compared to previous year. And regarding the business outlook and dynamics, they are actually very positive on the business outlook. As per the global industry outlook, they are actually expect the global demand for is very healthy and likely to grow from 63 million metric tons to around 78 to 83 million metric tons by 2030 for soda ash. So the increase in demand shall be driven by newer segments like solar, glass, lithium, and sodium bicarbonate. So the future capacity additions will be largely dominated by natural soda ash. However, because of supply chain concerns, synthetic soda ash will continue to grow as well. And regarding their China's presence in international trade will reduce significantly, they are likely to focus more on the domestic market. So the China's presence in international trade will reduce significantly. That will actually be positive for companies like GHCL. And in view of the above, the long-term demand scenario will be very robust. And there is some blip that may occur in the short term, but China has a surplus situation due to a dip in the real estate market, and the supply in the rest of the world remains tight. So that is the reason why the soda ash price is not likely to fall. And going forward, there could be some cost benefits benefiting soda, energy, and raw material prices. And regarding the textile outlook, the textile industry currently is actually having headwinds. And spinning is also facing the heat as the cotton yarn prices have corrected sharply from the peak and spreads have contracted. So there is a lack of demand from across the user segment. The industry likely face two challenges at least 2 quarters. As stated earlier, we continue to believe that in the longer run, our margins shall resume back to 17-20% range. So they are optimistic of the revenues increasing in the long term, even though there are headwinds in the textile sector currently. And regarding their they also in the investor presentation also mentioned about their industry dynamics for soda ash, and is exactly so it has shown the least volatility when compared to other major high volume commodities over the last 12 years. And regarding their they also mentioned a lot of points regarding their products in this website. You can actually go through that. And they also have done greenfield expansions from time to time depending on the demand. And they are also, as I mentioned earlier, they are also the demerger of the textile business to form it will be GHCL Textiles Limited. So one shareholder of GHCL will be allotted one share of GHCL Textiles Limited in the ratio 1:1. That will be listed in both NSE and BSE. And the promoters holding is one negative for this company is actually 19%, and the FIA holding is around institution HNA holding 41%, and the non-institution holding is 39%. And regarding the future focus, so they plans to double the RBC capacity from 60,000 to 1,20,000 ton metric, and they actually are focused on greenfield soda ash products 5 lakh metric ton per annum. They are augmenting the backward integration of raw material for enhancing control on cost. They are actually focusing on reducing carbon footprint. They actually proposed a 6.5 renewable energy project. They are exploring the product basket expansion, synergic and value-added bulk chemicals. They are also planning into the bulk chemicals segment also. And they are also planning expansion of the spinning facility So they actually completed the expansion in December 22 to 40,000 spindles. They are also focusing on renewable energy segment for the reducing the cost for the textile segment. They actually implemented 20 megawatts renewable solar renewable energy capacity completed in the FY22, FY23. And they have also been awarded the CSR Excellence Award in Mahatma Gandhi Award for CSR Excellence 2021, and they got many other awards. So in the website, you can in the presentation of their company, you can also see the industry dynamics and the demand scenario for their products, both soda ash and sodium bicarbonate. So they have a commanding leadership in soda ash manufacturing. So they actually manufacture light soda ash and dense soda ash and sodium bicarbonate, as shown in the picture here. So they have single largest soda ash plant in India in a single location. They have limestone and salt mine located within 40 kilometer distance. They have best in class productivity, and they have supply chain existence, and they have innovated from coke to briquette, coke for custom optimization, and they have static control over fuel. Only company having its own lignite mines, and they have expertise and specialization of 30 years and focus on cost competitive circle. So there, as mentioned, they have a 25% market share and 12 lakh metric tons per annum capacity. They have 20%, 30% EBITDA margin, and the global outlook for the global size is capacity is 71 million metric tons per annum, and production is 64 million metric tons. And the global soda ash market conditions are really balanced in most parts of the world other than China, where the demand scenario remain weak due to poor performance construction industry, and demand in South America and US remains strong. And in the presentation, you can actually see the capacity and production in different countries in America, Europe and Turkey, and India. India, the capacity is 4.3 million metric tons per annum, the production is 3.6 million metric tons per annum. And in America, it is 13.3 and 11.6, production is 7.6 and capacity 13.3. And Europe and Turkey, it is 15.1, 13.6. And China, it is 31.2 million metric tons per annum, production 29.1 million metric tons per annum. So there is a lot of catch up that India can do as compared to China. And rest of the world, the total capacity is 6.8 metric tons per annum, and the production is 5.8 MMT. So the Middle East and Africa, there is a demand in our Arabian Gulf due to reported due to strong, with both container and flat glass performing well. China, the demand is muted. Turkey, the soda ash demand is reported to be good, especially for container glass, with detergents remain balanced. And US, the soda ash market remain balanced. Annual contracts have been closed with price hikes. In Europe, the soda ash price, which peaked in October, have reported settled down with easing gas prices. Overall demand in the European Union is stable. And the end user concentration, 13% is concentrated is in detergent, 51% used in the glass industry, 9% aluminium and mining, and 14% chemicals, and 17% others. So the domestic market share around GHCL actually contributes around 25% of the domestic market share, and 60% is contributed by other players, and 15% is demand is made to imports. And there is a, if you see the total demand in the domestic million metric tons, actually from 2007 to 2021, the demand has increased to 41 million metric tons, and the growth, there is a growth actually reported in 2022 as compared to 2021. And regarding the domestic demand concentration, North actually contributes 29% of the demand, South contributes 19%, and West is 15%, Gujarat contributes 28%, in the East 9%. End user segment, detergent contributes 40%, glass 31%, silicates 9%, chemicals 15%, and others 5%. So normally soda ash, there is a historically there is no mismatches in demand supply. The supply always meet the demand globally, and they have excellence in execution, and they have visibility of earnings in the future. And regarding the application soda ash, you can actually see the soaps and detergents actually are one of the end user industries, and they are also used in glass manufacturing, in chemicals industries, paper and pulp manufacturer, textile industries, non-ferrous industry, water treatment and mining, and also in solar panels. And regarding the other products, sodium bicarbonate, they actually doubled their product capacity from 30,000 tons to 60,000 tons in December 2017. And they are actually used in cooking, pharmaceuticals, fire extinguishers, pH balancer, and cleaning agent. They have specialization experience in the manufacturing for around a decade. Sodium bicarbonate known as baking soda, bread soda, cooking soda, and bicarbonate soda. Their demand actually domestic demand share 66% is met through other domestic players. GHCL actually contributes 21% of the domestic share, and 13% is met through imports. And regarding the demand, 16% of demand is concentrated in the west. So south actually contributes to 71% of the demand. Gujarat contributes 24% of the demand. East contributes 16%, and north 23%. Regarding the end user segment, home and personal care used 9% of the demand, agrochem 10%, healthcare 12%, animal feed 23%, industrial use 24%. And the applications, tannery, pharma, food, animal feed, and chemicals. So regarding their market clients, Hindustan, Unilever, Borosil, Patanjali, etc. are some of their clients. And regarding the textile segment, they actually demonstrated subdued gains over the long term, and they are on track to deliver the next leg of growth. And regarding their, as mentioned by their EBITDA has actually declined in 9 months of FY23 as compared to FY22 due to lower cotton prices. So there is expect to improve in future. And they are actually started the journey started the acquisition 6 spinning unit in 2002, and they now have 47 megawatts renewable energy and 2.25 lakh spindles, 3,332 rotors, and 5 air jet spinning machines and 5,760 TFT drums. So they have state of art manufacturing infrastructure in machines from Germany, import from Germany. And they actually they have market clients like Raymond, Aravind, Wellspun, Ramdad, etc. And so the demand is actually expected to continue in future once the cotton prices recover. So both the chemical and the textile sector, both their products, soda ash, sodium bicarbonate, and textile sectors, textile demand will actually boost the revenues expected to boost revenues in future also for this company. If you see the share price chart of this company's stock price has actually, in the 3-year price chart of the company, the stock price has moved from around 95 levels to around, it has slowly risen from 95 levels to around 150 levels in October. From it actually crossed to 200 levels in January 2021. Then it actually started rising again and touched around 440 levels in October based on the improved results. So it actually started rising again, and till it actually touched an all-time high of 663 levels in June 2022. And it actually stayed in the price range of 550 to 600 for a period, and actually made an all-time high of around 690 in September. Then it had a correction, and after the war in Ukraine started, when the textile sector dipped. But even though the soda ash, the results of the other organic chemicals continue to be good, but it has now actually corrected to around 515 levels. So it has already given 400% returns in the last 3 years, but still the valuation looks very attractive for long terms. It's traded just 4 times FY23. Expect EPS around 115 120. And the one negative for the company is that it is actually the balance sheet. The balance sheet is very strong. The reserves are 3,502 crores, and the borrowings are just 509 crores. And equity capital is 96 crores. One negative for the company is that the shareholding pattern, promoters holding 19%, FI holding increased from 16.3 to 74.38%, and the mutual fund holding is 11%. The mutual fund holding has dropped from around 19 in March 2022 to around 11% level now. But still, some mutual funds like DSP small cap funds hold 6%, Franklin India smaller cap funds hold 2%. LIC actually sold their stake in March 2022, and UT hybrid equity funds sold 1.17%. And regarding the FI holding, FIS, some FIs like Iris Diversified, US Multi-Strategy Limited, Fund Limited, Hypnos Fund Limited all hold 3%. Hypnos sold their stakes in June 2021, and some other funds like ELM Park Fund Limited and Vanguard Emerging Market Stock Index Fund actually hold around 1%. They actually acquired the share in the December 2022. So based on all the strong promoter holding and the valuations it commands in the future for chemical and soda ash looks bright in future, and both the textile sector is likely to grow in future also. I am actually expecting that this company might improve the revenues in future also based on the increased demand for soda ash and sodium bicarbonate by end user industries. I will not be surprised if the company might post an EPS around 120 to 140 in the next FY24, and maybe 150 level EPS is possible in the FY25. So based on the increased profitability growth, so we can actually expect a profit of around over 1,500 crores in the next 2-3 years. That may actually result in the stock price touching over 1,000 levels. That is my expectation. I am investing in the stock from around 300-400 levels. So I am bullish on the stock for long term. A risk-averse investor can keep a stop loss if there is any market correction, but I feel very tempted outside the current levels. So I am very positive. I am actually expect my personal targets around 1000 levels in next 2 to 3 years in GHCL Ltd. It's a very good value buy for me, as per me, for long term investment.